Good evening, everyone. Myself,
Good
Tejas Pai,
evening.
on behalf of Kirin Advisors. It's a pleasure to welcome you all to Beyond the Numbers Value Discovery Summit 2025, powered by Value Educator and co-powered by Kirin Advisors. Today marks the final day of our three-day summit, featuring a powerful lineup of focused management meetings to conclude the journey on a high note. This is the 11th interaction of the day with Oval Projects Engineering Limited. From the management team, we have with us Mr. Gautam Devnath, Chairman and Managing Director of the company. Good evening, sir. Welcome.
Good evening. Good evening.
We also have Ms. Princy Gupta, Chief Financial Officer of the company. Good evening, ma'am. Welcome.
Good evening. Thank you.
From Value Educator team, we have with us Mr. Sahib. Good evening. Welcome.
Thank you.
With that, now I hand over the floor to Mr. Sahil. Over to you.
Thank you for the introduction. Before we start, a quick background on Oval Projects Engineering Limited. The company incorporated in 2013. The company is an infrastructure service company working across oil and gas, city gas distribution, urban development, and engineering energy. Headquartered in Agartala, the company executes EPC projects such as gas processing plants, storage terminals, CNG stations, and pipeline networks, while also managing and operations and maintenance services, city gas distribution, and gas-based facilities. Beyond oil and gas, it undertakes urban development and civil infrastructure projects funded by the government and international agencies. With this brief introduction about the company, now I hand over the call to Mr. Gautam Devnath from the management. Over to you, sir.
Good evening. Myself, Gautam Devnath. I'm mechanical engineer. After completion of my engineering, I joined working with the government of Assam as a scientific officer. But after 1 year of my service, I left the job and started doing uh, jobs in Punjloyat. This is a Delhi-based company. That's a APC oil and gas companies. And after completion of there 4 to 5 years of time, I decided to start my own venture named Oval Projects. I founded this company on 2013, and we started with a humble background, a little bit of capital, and uh, started with a small job in terms of supplying manpower to ONGC. I started with the 1 crore. First job was worth of 1 crore. After that, we got the repeated job, repeat work order from ONGC itself, another 1 crore. After that, 7.5 crore. So we started with the supplying of manpower, expert manpower to them as a project management consultant. Later on, we found there an opportunity of getting into this, service sector in terms of facility development projects of ONGC, GAIL, and all. So we started with building small projects like this the flare stack foundations or flare stack construction, or like separator installations, like vessels installation, vessel fabrication, tank foundations, tank fabrications, all whatever required their facility management. Small jobs, it's one kind of, if you go for plant construction, plant is a whole, starting from crude receiving to final product. There are a lot of facilities are there. We started with the small projects of then whole plant, and later on we completed total projects. Complete 4.5 lakh standard cubic meter capacity GCS for ONGC. Till date, we have completed 4 GCS for ONGC. Later on, we shifted our journey to pipeline construction and flow line construction, and thereafter CGD projects also. So our whole strength is in oil and gas, that we are in everywhere, wherever the facility is required to build up by our client like ONGC, Oil India, GAIL, IOCL, and all these PSUs. We are there. We are there for give our services. What happened actually, what is happening in the industry, whole industry, in oil and gas industry, there is a requirement. If you want to get into execution of those projects, you have to have that kind of previous experience in execution of those projects. So in our industry, our USP is that experience. You can't, if you are a civil contractor, you can't get into the those businesses, because you have to have maintained a lot of safety standards and lot of specification which is governed by uh, American standard and European standard, which we Indians are follow. My exposure was actually, I was working with Saudi Aramco from Punjab. I was assigned for Saudi Aramco projects and Qatar Foundation projects. So I was having that kind of exposure of executing projects for those companies. So after that, in ONGC, EIL, GAIL, all these, I found that these people are also following those standards. So later on, we got an edge of execution projects in. I will come into next ADB infrastructure projects later on. Now coming to our USP, our USP is to that execution of all kind of spectrum, facility development spectrum projects. Like if you go for the CGD projects, if you go for the plant construction, if you go for the pipeline projects, if you go for the DPNG connection, if you go for the MDA connection, we are there compared to our market competitors with who are on the market. So if you go for the market peers like this Likita Construction, they are expert in pipeline. They are not into plant. If you go for the KEC, they are also expert in pipeline construction. They are not in the pipeline, yeah, plant construction. You go for Kalpataru. Kalpataru is our actual competitor because they are having a lot of experience in plant, CGD as well as pipeline. If you go for the LNT, they are our competitor. So in our area, we being a very small company, but we are competing with those big companies like Kalpataru and L&T. So apart from Kalpataru L&T, there are few companies who are unlisted. There's a Hall Offshore, Premier Cryogenics, and Sopan Energy. They are our actually competitor. But in listed space, our competitor Likita and as well as case and all, they are not actual our competitor. So my whole discussion point is that we are in such a good shape that we never think about the market acquisition or never think about the project which we suppose we are setting in 2005 ending of 2005. We are having lot of runway in our projects, which we got. Now we have a 500, more than 500 crore unexecuted order. So taking projects and execution of that, we are not bother about that taking projects for our client. We are only polishing ourselves in terms of increasing our efficiency, lower the overhead and all. So now coming to our another segment, which is O&M. So after development of facility, there is a huge requirement of operational maintenance of those plant or those facilities. So we are also started giving services into O&M, operational maintenance. So this is a again is a very good business which gives us recurring business. Monthly cash flow is a very good business. Operational maintenance on those facilities whichever we have built. And after that we still in last 4 years back we got opportunity get into this ADB and World Bank funded projects, especially R1 infrastructure. And we started our career from this, Agartala is our entrepreneur journey in Tripura. So Tripura being a northeast state, that Tripura is getting a lot of funds in from ADB and World Bank and other central government funds to for their development. So we got the opportunity to get into those jobs because we are maintaining high standard and specification in terms of execution of projects in oil and gas. So in ADB and World Bank projects, they actually given a lot of high standard requirement in their tenders. So certainly, actually, those people from representative from ADB and World Bank, they found us from our own GC because they are not getting any kind of good contractors over there. So we got this opportunity and got into this ADB World Bank projects. But we limited ourselves in Tripura only for those projects. Out of Tripura, we are actually uh, 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 doing our projects pan India basis only oil and gas field. So this is our total, and we take the projects from oil and gas PSU like ONGC, GAIL, IOCL, HPCL, and PPCL, all those companies on tendering basis. The project duration more or less 2 to 3 years of time. We prefer to take plant construction job, or pipeline jobs, CGD jobs, station jobs, and all. And O&M, obviously CGD O&M we are actually getting into, and we are trying to get into those GDU as well as compressor O&M projects recently. Our aim is to get into next year in ONGC or compression jobs and as well as GDU O&M job. That's from my side.
Thank you so much, Gautam sir. Princy ma'am, would you like to add anything to it, or shall we start with the Q&A session?
We can start with the question.
Okay. Participants, the floor is now open for Q&A. Participants, the floor is now open for Q&A session. Kindly raise your hand, or you can also drop your questions in the chat. Sir, kindly go ahead.
Thank you so much for giving me this opportunity. Sir, my question is like I want to understand more on the business side. Like, are we into combined gas stations work as well?
Combined gas stations for what purpose?
Sir, like you said that we do GCS work,
Yeah,
so is it similar to combined gas stations work?
maybe the terminology is different. Combined gas station used for, sir? May I know? Because
Uh,
in gas value chain we are everywhere. City gas station you are talking about?
yes, yes, right, sir.
Yeah, we have built city gas station for IOCL, two city gas station, and we have built city gas station for AGCL also.
Okay, okay. So, sir, we are also doing cross-country pipeline work,
Yeah.
like
Which company? Which company, sir?
like Oval.
We are doing pipeline jobs. Yeah.
So, for
Mm.
example, I have read a documentary like around 25 to 30,000 kilometers of pipeline is there in currently in India, which is
Yes.
going to be 45,000 of the network. So we do that.
Yes, sir. We are in
Okay,
that
okay,
line. We have our eight. We have completed the projects up to 18-inch pipeline for 20 kilometer, and second one is 12-inch kilometer pipeline. We are actually executing for Gale. There's a 42 kilometer in offshore field in Uran to Usar in Bombay, and we are executing another project 12-inch 56 kilometer pipeline in Assam. So these are the major projects in cross-country pipeline we have completed. Yeah, we are executing. And we completed 10-inch 58 kilometer in Tripura and 20-inch 18 kilometer Tripura and 6-inch 18 kilometer in Jharkhand, 6-inch 12 kilometer in Rajasthan.
okay, got it, sir. Sir, my last question is, there is a company called Vectras. Do you think it is going to be a competition?
Actress is actually we known party to us. Is a good friend of mine. Is no this company. I know this company is a good company. They are executing good projects.
Okay, sir. What I want to ask from this is like, see this all
But their
Navratna.
spectrum is please sorry, pardon.
Sir, the why I asked you question this, ki sir, this Navratna companies are now in a trend in last 3 to 4 years. What I feel is ki giving opportunity to private players. So how do you think this private sector is going to establish and be it into gas aggregation business, be into we are developing CNG and all this kind of stations. So how privatization is going to help these Navratna companies?
So not Navratna company, the whole ministry actually trying to bring these private players. Earlier, PMLA lease 2, lease 3, there is a codes actually given by government. Earlier, government used to give this lease of exploration lease to only the private, yeah, the PSU companies, ONGC and Oil India, the two companies. And a third company was the Vedanta, which is actually again joint venture of 35% stake of ONGC itself. So these three companies were actually exploring whole oil and gas market in India. Now, what is happening? We are actually importing 88% of oil from outside and 50% gas from outside. Now, last 10 years, we are not actually uh, uh, got success any kind of new oil field or new gas field in India. Recently, we got success in Andaman. So government is coming with a strategy that you bring more and more private players so that investment in exploration and production is very high. If you go for one well, So you have to have invest of 100 or only work over purpose. You have to invest on 60 crore rupees. So the government is bringing player like British Petroleum. British Petroleum has a tie up with the ONGC now in offshore development projects. They brought some small player from India itself. For like this is for small fields. For bigger fields, again ONGC and Oil India are the major player. And now British Petroleum is now trying up with the ONGC for exploring offshore field.
Got it. Got it. Sir, you were saying about something like a Vectras when I got you in between.
No, our spectrum is larger. Their spectrum is
Okay, got
limited.
it.
That's why I'm trying to our spectrum now. What's the time? Because I have experience in this field last 20 years, and we got an opportunity to work in. I got an opportunity to work in Saudi Aramco and Qatar Foundation and different parts of India's and outside also. So from the very beginning, I created a concept in my mind that I have to have for next 10 years I have to have that kind of opportunity in my hand so that nobody can get into, because for to grab this opportunity you have to have that kind of experience in your hand. If you see my project list, you will find small project we have taken. There is a strategic projects we have taken so that we can get the experience and get to participate in next project in that field. So a whole gas value chain, there are a lot of things, are a lot of companies are there. Somebody is doing CGD business only, city gas distribution facility development. Somebody is executing projects for pipeline. Somebody is executing gas processing plant. Somebody is expert in operation maintenance. But we are everywhere.
Got it.
We are
Uh,
everywhere.
got it, sir.
Suppose from in next 3 years, government decides to not to go for any kind of further exploration. Suppose ONGC or Oil India. So we don't have any kind of problem because we have the experience in operation maintenance. So we'll go for the operation maintenance. So our revenue will not dip. We have
Got it.
that whole spectrum in our hand.
Understood. That's it all from my side. I will join queue. Thank you so much, sir.
Thank
Thank you
you.
so
Thank
much,
you, sir.
Akash, sir. Mr. Madhur, please go ahead. Kindly unmute yourself.
So, Mr. Deb, I'm trying to understand what kind of target do we have for FY26 and FY27 in terms of top line as well as our EBITDA margin.
Yeah. Sir, we in 2025-26 we are trying to complete this by 150 crore and to 210 for the 26-27, and up to 27-28 we are trying to catch more than 250 crore. That's our next 3 years plan. And EBITDA more than 18%. We are trying to catch 20% EBITDA target.
So now, Mr. Gautam, for such good growth, are we fully funded with the IPO proceeds or will require more funding?
No, so now whatever funding we have received, we have put all our funding in our working as a working capital in our projects. For executing this type in hand projects, we don't need any kind of fund. But if you grow, if we want to grow more faster and capture more market and for larger picture, definitely we will think for next funding. But for in hand projects, we don't need any fund.
So basically, what I understood is that for the next 3 years or to reach 250 crore top line, we are funded, but beyond that, we might require funds. Is that understanding correct?
Sir, yes, sir. Whatever project we have already in our hand, that we are our working capital is sufficient enough to execute those projects. But if you definitely, if you look into the larger or bigger picture, the market is huge, na. So market is huge, and Northeast there is an investment of 1 lakh crore in oil and gas field itself up to 2030. If you go in that direction, that we will go for another larger market size, we definitely need more money. This is a capital intensive business.
So basically, our internal accrual and debt will not be sufficient.
Obviously, next to three in this way, now we have actually planned for our internal purpose. So for what we will achieve this kind of target with 30% growth and 18% EBITDA and 20% EBITDA will go like this way. uh, our 250 crore within three years of time. If you go for 250 crore, 500 crore next 3 years of time, then there is a different picture. But in this way, we will achieve this growth only.
Right. Sir, in our annual report, we have mentioned that we expect to end the FY26 with an order book of 600 crores. So that
Yeah.
would mean that incremental 200 order should come in over the next 3 months. So is that are you on track to
Yes, yes,
get that
sir.
order inflow?
Yes, sir. We already achieved 517 crore, and we have bidded for another 200 crore already. We have submitted our bid, so hopefully we will get this target. There is
And sir,
absolutely
what
no problem.
do we expect to get 100% of these 200 crores order bids
No,
that we
no,
have?
no, no, no,
So
no,
how
no.
much do we expect to get out of
Uh,
these? What would, yeah.
we gently cross our this 600 crore target.
Okay, 600. So, uh, if I'm considering that 520 crores we have right now, 100 crore will be executing in the next maybe for this few months. Okay, sir, got it. And sir, we've mentioned in our annual report that there's a lot of orders that is coming
So
in.
your voice is not. It's getting low in between.
Right. Is it better right now?
Yeah.
Yes, yes, it's better.
Yeah. So, in our annual report, we have mentioned that the Tripura natural gas pipeline, as well as the Assam refinery, the NRL
Mm.
refinery, all these projects coming up, sir. So, what is the expected order bid pipeline that we have that is relevant for us, and in the orders that we are qualified for till the amount? What is the amount for the next 1 or 2 years?
Sir, I didn't get your point. Are you looking
Right.
for? Uh,
Sir, I'm just trying to understand what is the quantum of orders that will be bidding for over the next 1 or 2 years.
Yes, but for this year, what we next year we will be targeting for 366 crore to get the 210 crore turnover of target, and to match this 3.5 to 4% of our turnover ratio. To match this figure, we need to have that kind of 366 crore another new order in our kitty
Right.
for next
Sir,
year.
right. Sir, I'm just trying to sir, in your annual report, you have mentioned that a lot of these refineries, as well as the Tripura natural gas, the government entity are going to give these new CNG pipeline,
Yes.
CNG gas station, all
Yes.
these orders. So I'm trying to understand what is the amount of orders that will be coming for bidding.
The market size is very big, sir. Say only
Right,
alone in Tripura as well as in Assam. There is investment only in Tripura and Assam and sorry, a little bit part of Mizoram and Nagaland. There is
right,
investment of 1 lakh crore by 2030. If you search Times of India journal, if you search in Google, there is a 1 lakh crore investment proposal. Out
right.
of that,
Got it.
NRL expansion is going on. Out of that, IOCL Bongaigaon refinery is going on. And out of the ABFCL 10,000 crore investment of again Wall India. Out of that, the Tripura Gas Development Network, IGGL 15,000 crore pipeline network. There are a lot of projects are there.
Right.
So
Sir, so
now we have to choose. We have to choose where the margin is better. So
got it.
I'm looking into those projects. I'm bidding into those projects. Everywhere we can bid because there is a requirement of EMD and all. So now I'm looking into I go through the whenever tender comes, I go through the whole tenders and all. So wherever we feel that there is a margin would be great in higher side, then we participate in those projects.
Got it. And sir, we mentioned that we'll be able to bid for pipeline projects more than 100 crores or so. Have we started bidding for those amount of contracts?
Sir, now after certain milestone we have achieved in last year, so now we are qualifying for planned construction more than 100 crore volume projects, and as well as pipeline more than 100 crore. Now we are looking for those projects. IGGL phase 2, we are coming with the 80, 90 crore jobs in pipeline. And as well as we are waiting for one projects in from Gujarat from ONGC. There is a more than 100 crore job GCS. We are planning to participate on those projects. But obviously next year, because in this year, whatever target we have decided for internal purpose, it is more or less achieving in this year. by
Got,
this year end.
got it. And sir, out of these 520 crores, how much is operation and maintenance order book that we have currently?
That's a little bit, some approximately 30 to 40 crores, not much higher. Because we are focusing operation maintenance projects more and more in Tripura itself. Because operation maintenance team and Tripura itself. Because I want to keep my overhead low. So whosoever getting little bit free in the finishing stage of our projects, I am just putting them into operation maintenance. So I'm optimizing our manpower to more keeping our less overhead and give the maximum efficiency in the
Got
whole
it. And sir,
system.
what kind of margin profile do we make on the operation and maintenance business?
So
Same margin. It's a not margin. This is a cash flow. If you go for the EPC business or a project, there is a milestone. You will get the payment within a month or 2 months of time. But in operation maintenance, you will get every month payment, regardless of your milestone achieve or not.
Sir, so is it fair to assume that we would be making 20% operating margin on these contracts as well?
EBITDA margin.
Yes.
Yeah.
Okay. And sir, where do we see the operation and maintenance segment growing over the next 2 to 3 years? Can this become a 100 crore revenue segment for us?
Uh, Yeah, we can. If you can get this operation maintenance more than 100 crore revenue, it's a very difficult thing because their projects is a long-term projects and 5 year you will get only 150 crore job. If you take one GDU projects or you have one compressor projects for operation maintenance, 150 crore projects to 5 years of time. So in
Right.
1 year, 100 crore revenue from operation maintenance is very difficult. So
Right.
obviously, if you go for the projects, obviously it will more than 100 crore revenue in 1 year of time. It is
So out of the
200 crore.
just the final question from me, sir, for the 150, 160 crore that we are planning, how
Hmm.
much should come from operation and maintenance this year? And sir, when this scales to 250 crores in the next 2 years, how much of the revenue should come from operation and maintenance?
So now,
hardly, if I answer,
Yes, ma'am.
last year the percentage of operation and maintenance was around 3.79. This year will be around the same. The percentage will remain same. There will be no increase or decrease.
I said this year, Prince, I think the flow line projects are giving more. So flow line projects are not added in those. So approximately 25 to 30 crore this year we can achieve.
Right. And this should grow to how much, sir, when we do a 250 crore revenue?
Operation maintenance.
Right.
So it will take another 5 years of time, sir.
Got it. Sir, that was from mine, sir. Thank you so much and all the best.
Thank you so much, Madhu sir. Udit sir, please go ahead.
Yes, sir. Good evening. Uh, so, sir, currently you're saying our order book is around 500 crores. What is the average
Yeah,
period for execution?
2 to 3 years of time, sir.
Okay. So, 2 to 3 years of time. So that, I mean, you said that out of this 500 and 60 will be doing this year. So for out of this, uh, 200 will be doing next year and 250 the year after that.
Yeah,
Okay, that's how you will execute it.
yeah.
And the further orders, like what we are planning to take within, by the end of this year or next year, uh, what could, be the potential for those?
The potential is huge, sir. The
Hmm.
market is very big. We can take as much as we can have it. So it depends upon our team capacity and depends upon the margin, what kind of margin actually coming with these projects. We will choose. Our market size is very big because of, and as if you heard about it, that we are in total spectrum. We are giving services of whole facility management. So market size is very big, potential is very high. So now we have to slowly develop our team, increase our capacity, not to, taking projects is very easy, but executing projects is, tough thing. So we have to create our team like that. So going into next year, 500 crore or 600 crores, not easy job. We have to develop our team. We have to more and more expert people, hire expert people from the market. And in Northeast executing projects, it's a hilly terrain, so there are a lot of challenges also.
Got it. And what are the kind of EBITDA margins do you think you can maintain?
More than 18%, 20% we are targeting to achieve very shortly.
Okay, got it. Right, sir. Thank you. That's it from my side.
Thank you so much, Udit sir. Vishwendra sir, please go ahead.
Am I audible?
Hello. Yes, yes.
Sir, I wanted to ask about the second half of execution. I missed on that part. So, what is the execution of order book that we are targeting for H2?
Your result you were talking about?
Yes, sir. So, like second half, हम कितना order book execute करने का
We
target?
already achieved, I think 56 crore in H1.
Yes,
So
sir.
and 100 crore we are targeting for by March 2026.
Okay, so like after executing like 100 crore, and we would be left with almost 400 crore of our current order book, and we are
No,
targeting.
more than 500 crore.
Okay, so like, are there orders of 100 crore on the verge of winning for a company? Because if we add the math, so like 200 crore or something of order would be win in the second half. Is that correct?
Yes, we are
Or am I?
84 crore. We are 84 crore left behind. So and for that, and we for that we have bidded for 200 crore projects. Maybe
Okay.
we will be getting more than 84 crore job.
Okay, noted. Also, sir, I looked at the EBITDA margins in the past 3 years. So it has hovered around 5% to 13%, and then 17%, and now we are like attaining 20%. So what has led to this improvement in EBITDA margins?
First of all, the operational efficiency. Again, I am telling. So by maintain, it's
Sir,
getting
I think
echo.
there's an echo. Uh, Prince and Gautam sir, are you guys in the same room?
No,
Now there's no echo, I guess.
yeah.
Please go ahead.
Uh, First of all, this operational efficiency, and second is the projects. Whatever projects we have taken in 2017, 18, 19, 20, these projects are now get under completion stage. So in last completion stage, now there is a 10% margins are there where you don't need to put any kind of money to get those milestone complete. So that 10% money is coming back in our account. So without putting our extra fund into it. So that's the main thing you are getting and fast from starting in the during the starting of our company. So that part was not there. Starting we started with the project management consulting services. By 2016-17 we started getting small jobs, and 18-19 we have taken bigger projects, which is about to complete in 21, 23, 24, 25. So these projects are now completing, and we are getting those last 10% margin. That's the actually spike our EBITDA.
Okay, noted, sir. Also, sir, I wanted to ask on the confirmation that one of our subsidiaries are they having operations with for parent company, because on a consolidated basis our revenue is slightly lesser than on standalone basis. So, is there some subsidiary that are having operation for our own parent company?
So it was not due
Subsidiary.
to our subsidiary. It was due to the JV, joint venture.
Oh, acha, not subsidiary, it's a joint venture.
Am I audible?
Yes, ma'am. You're right.
I think you're talking about this Raviraj, right?
Yes, sir. Yes, sir.
Okay. This is not our subsidiary, sir.
Okay, so this joint venture of that Raviraj Bokadia Creative, right? Am I correct?
Yes.
So, sir, like, what is the other joint venture partner brings to the table, and like, what is a order book related to that joint venture in a total order book?
Only I think The Raviraj, with Raviraj, we are executing two projects. One is taken 2023, I think, and this year we have taken another job. The two projects only.
Any like rough quantum on that order?
Total order book size is combined together is 200 crore. But whatever
So 200 crore.
whatever order book we are talking about, our 500, by taking that consideration only. We are the 51% partner in this group as a lead partner. So we have taken the value of 50%, 1% in 500 crore. So that
We are all only accounting for our share.
yeah, right.
Okay, so just a quick question. Like on the RHP, I saw that we have given some corporate guarantees of roughly 50 crore for that joint venture. So, like, is it suitable for a company with our size to have a such a high exposure? Like, it is comfortable for us, or are we seeing some reduction in that going
Sorry,
ahead?
sir, 40-50 crore corporate guarantee. I have not given any.
In RHP, there is a pointer that we have given some guarantees of roughly 50 crores for that unit. It is not a debt part, but a corporate guarantee part. If
No,
like you have RHP, I can navigate the page if you have that RHP open on
why
your
it is
page.
required, sir? Is only 150 crore job. We need only 15 crore guarantee. So corporate
No,
guarantee 50 crore.
that I agree, sir. But like there is a pointer that I can read also. There are some summary of contingent liabilities, and the exposure for us is 50.7 crore for FY25. Current contingent liability part is showing that there
Princy,
we are.
you are not audible. Princy, please clarify.
Am I audible?
Yeah.
That is corporate guarantee. That is bank guarantee we had given for work orders.
Also bank guarantee, sir. For whole projects, not only those projects.
Okay, so we have given the bank guarantees for that joint venture order book.
No,
Am I
no,
correct?
that joint venture order. That all, our project size is a 700 crore. And we have completed more than 200 crore. That's why now we are in 497 or something, 517. So for those all projects, we have given the corporate guarantee as our projects. For that project, this joint venture project, we have never given any kind of guarantee.
Okay, sir. Noted. Thank you, sir. That will be all.
Thank you so much, Vishwendra sir. Apar sir, please go ahead.
Thank you, ma'am, again for giving the opportunity. Sir, basically, I'm new to this industry. I want to more understand on the business levels. Sir, do we procure any raw material from these vendors when we construct this cross-country pipelines and stations for them?
Mm.
Or how do we source raw material, sir?
So yeah, if you go for the pipeline cross-country pipeline projects, the majority of in cases like apart from ONGC, people GAIL, IOCL, all are actually this giving us the free issue material as a CS pipeline. And for to fabricate those pipelines, like this consumables like electrodes, heat shrink sleeves, and measure this SDD duct, HDP ducts, and cables, optical fiber cables, control room stations, machineries like instrumentation, PLC control panel or DCS, whatever required, transmitter, gauges, and all, we procure it from the market. And they have a suggested vendor list. Whosoever the client, as like at ONGC, be like at this Gale, they have particular suggested vendor list. So we have to procure from them only because they are approved in their, company.
Okay.
And they have gone through a lot of procedure and standard specification requirement of those guided by EIL specific. Majorly all companies are following EIL guideline, and EIL is following American guideline.
Sir, which segment is your highest revenue generating segment?
Mm,
Like this city gas, CGD, or this cross-country pipeline?
depends upon the project, sir. Depends upon the projects. Not you can
Okay.
say I can't say the GCS project. Sometimes we have taken GCS projects to get our only experience in initial stage or initial
Sir,
stage.
I have here a doubt. Like, what is GCS is like a gas collection store. So we make a gas collection store for this ONGC and all companies.
GCS is not gas collecting station or gas producing station or gas processing station. GCS
Okay.
oblique you can say a gas processing station. So that is we built for this ONGC. There's an exploration company. ONGC and Oil India is exploration company. Whatever export they have export the product like oil and gas. They whenever it comes into the surface, then it to process it like refinery where when they built up a refinery, the GCS or GGS, GPS, whatever you say, that's a gas refinery station. So we built up that gas refinery station for ONGC and Oil India.
Kind of storage or a warehousing kind of facility in nutshell, sir.
No,
Is it?
fully processing. And gas carries lot of sulfur or lot of oil, sands, and
Hmm.
condensate, effluent. There are a lot of parameter, but we need pure gas to deliver. So that whole processing station is there.
Okay, okay. And sir, also you mentioned that Kalpatru is kind of your competitor,
Yeah,
but
is a
so sir,
big
it is into real estate, right? In MMR
No,
region?
no, no. Kalpataru is in real estate, Kalpataru is power sector, Kalpataru is in oil and gas sector also.
Okay, got it. So I will again fall in queue, sir. Thank you.
Hmm.
Thank you so much, Apar sir. Uh, Sridhar sir, please go ahead.
Just I come across like you're comparing with Kalpataru. Kalpataru size in oil and gas in a cross-country pipeline.
Yeah.
Is it bigger? Like your when you compare your size of a company, right? Can we compare with Kalpataru, or can we compare like companies like Likita and all smaller range?
Yes, we are competing really on regular basis. We got the project of 12-inch pipeline this in Assam. We compete with Likita, Kalpataru and all.
Agreed, but
Yeah.
you might be having a regional dominance because Northeast is in terms of execution, very few can execute as a contractors under company EPCs. Wherein rest of the India, they
Yes,
are
we are executing projects in Bombay also. We are executing projects in Jharkhand, Bihar. We are executing projects in Gujarat. Yes, obviously we agree on that. We are having some regional dominance over there, but on regular basis, now what is happening in Kalpataru, L&T is not coming into our picture because they are taking more than 500 crore job. Kalpataru is started avoiding jobs less than 100 crore. So, but our projects, whatever we had taken, we have competed with the Kalpataru because they are in same
yeah,
segment.
they're in the same segment. L&T, right from L&T to your
Yeah,
company, they're into same segment of oil and gas.
yeah.
Basically, now the highest demand is the cross-country pipeline and CNG and as well as the pipe gas. I do understand there's a lot of work, but your list of companies, when I see it, is mostly not your
Sir,
list of projects.
yes, sir. The criteria mentioned in the tender document, whatever projects are coming in from IGGL or GAIL and all, there is a two criteria actually mentioned. If you have the experience of suppose a 100-kilometer pipeline of 12-inch, so they will give you the criteria. If I have the experience of 8-inch diameter pipeline of 50% of that value, you will get into, you can bid for that project. That is the criteria. So we have completed 20-inch pipeline, 18 kilometer. We have completed 10-inch pipeline, 58 kilometer. Now we are qualified for an 16-inch inch pipeline and in 24-inch pipeline for 40 kilometer as well as 100 kilometer for 16-inch kilometer pipeline. So the competition is in that segment, not in the size of the projects. If the project size is bigger than 100 kilometer, then we will not be qualified. If the project size, so Kalpataru is coming, if he is interested, he can see the value is there. So he is competing with those projects.
Yeah, Kalpataru targets more than 100 crores. I do understand. And they
Yeah,
don't want to go less because it's an
But
it doesn't.
in our Silchar project, he was the computer. They were the computer. Our computer is KAC also.
Okay.
KAC
So
is very
now,
aggressive now.
now my question is for your expansion. Main of these small companies is the bank guarantees,
Yeah.
EMDs.
Yes, sir.
So if you are want to take more projects in future,
Yes, sir.
how you are going to go for it? Are you going for a liquidity of your equity or the debt route?
No, sir. Equity, I am not planning to liquidate more. It's enough. Now there's a one opportunity government has given in 2024, which the PUC company actually taken up lateral in later stage. Now they are coming up with the new projects, the surety bond. So they have come with a surety bond. ONGC, GAIL has accepted it, IOCL is accepting it, and all PSU companies are accepting it. NRL is accepting it. So this is
Can you
another
expand on that more? See, what is
surety
that?
bond.
COT, can you expand?
Surety bond. This is a one kind of insurance, sir. Instead of
Okay.
insurance, instead of you give me the bank, give them back guarantee, they accept the surety bond. So we are planning for those, those kind
So
of
that is
instruments.
working out cheaper.
Yeah.
Okay. So you mentioned corporate guarantee in the previous sum.
This is a
Is it
corporate
a corporate
company.
guarantee or bank guarantee?
Bank guarantee, sir. The bank guarantee.
Bank guarantee. It's not the corporate guarantee.
No, no, no.
Okay. Okay.
Thank you so much, Sridhar sir. Madhu sir, please go ahead.
Sir, thank you for the opportunity once again. Sir, I wanted to understand our inventory is close to 50 crores, which will be equivalent to one third of our revenue. Sir, so is this an industry which is very uh, uh, inventory heavy, where we need to stock our products? And where do we see the inventory days going forward?
The two factor actually. This inventory is because of milestone. If you want to achieve one milestone, suppose if you want to set up a vessel storage center, so you have to have the vessel to procure from one vendor, and have to procure from piping from another vendor, valve from another vendor, and this instrument from another vendor. So that now what is happening earlier before this IPO things have happened, and we were struggling in terms of growing fast and taking the projects, big projects. So we were actually trying to negotiate with the vendor of getting the material early and giving them payment later on. So that time vendor were dominating us, and they dictated us, whenever they suits their terms and conditions, they give us the material. So that time, what was happening, that vessel has come, but valve has not come, pipe has not come. So inventory is actually piling up that time. Now it is not happening. Now we have started to negotiate with the vendor, that we're trying to making a system planning of each and every material come in the same time, so that our inventory can keep lower side. All this system is generating now, because we have now cash working capital in hand. We can dictate to the vendor also. So
Sir,
that was earlier story.
Sir, so I'm looking at your balance sheet, sir. There's a short-term loan and advances where the majority is towards
And
advances that we have
sorry,
paid to our sir, there is a line item, short-term loans and advances, that is majority towards the advances to suppliers. So that has grown uh, a lot, sir. So that has
advances because of this PO, na, the vendor will never start their working until unless you give the 5% or
right.
10% advance.
But sir, when we say that we are managing inventory
Now
via
that's a dispatch. Dispatch, before dispatch, we have to give them 100% payment. Otherwise, they will not dispatch. So in that dispatch, we were struggling with the payment with the dispatch side. They will
but
start the work.
this figure has grown from 15 crores to 23 crores, as well as our inventory has grown from close to 45 crores to 50 crores. So both of these numbers are growing. So I'm not trying to understand. Sir, I couldn't understand how our inventory days are getting better, as you mentioned.
So this year you will see, na.
Right. Sir, that is from my side. Thank you so much and all the best.
Thank you so much, Madhu sir. So we have few questions in the chat box, so we'll take them. Uh, One is, over the medium term, what capital expenditure is required to scale capabilities, and how does management balance growth ambitions with balance sheet discipline?
Ma'am,
Okay,
pardon me.
I'll repeat the question. Over the medium term, what capital expenditure is required to scale capabilities, and how does management balance growth ambitions with balance sheet discipline?
Obviously, for balance sheet discipline, we are now listed company. We have to comply all the regulatory compliances and all. So automatically, we are now compliant, and our focus is to make our system better so that this question, this inventory and all. We are day by day we are improving ourselves, and we are keeping our daily progress regular basis to inform people and optimize our efficiency. We are upgrading ourselves on day-to-day basis, and implementing system in our internal process. And another question, the first question was that what is
Uh,
the
just a minute. What capital expenditure is required to scale capabilities?
capital expenditure we need only for this machinery and equipment. Whatever equipment we have and whatever target we are planning for next 3 to 4 years, we have we have 80% equipment against our target. So rest of the 20% target we need the equipments only, which will easily get finance from different banks, equipment finance. There is no any other requirement is there.
Okay. So, Apar sir, please go ahead.
Sir, I want to understand on this working capital only. Like we have around 59 CR of net working capital, like inventory plus
Mm.
debt, receivables net of this creditors, and we have a
Mhm.
top line of around 60 CR for H1. So probably, as we have commented, like we can add on to 80 CR more of H2. So it will give me around 60 plus 140 CR. So it is around three less than 3x of my working capital, and I have taken CC. I mean 40-45 CR of short-term loans. So are we kind of stuck because of this inventory only?
No, Princey, can you
So we had hardly
explain?
working capital of 22.5 CR
Please
other than
pardon,
a
ma'am.
bank guarantee.
Okay, got
Yeah.
it. So, ma'am, how do you see that this EPC industry, like where around churning could be around 5x or 6x from this? Okay, makes sense. Got it. And ma'am, this 6 year of long-term loan is for what kind of plant and machinery?
Yes, sir. There is vehicle loans and other term loans.
JCB, Hydra, this all
Exactly.
this equipment.
Okay, got it. Thank you, sir. Thank you.
Thank you so much, Apar sir. Participants, if there are any further questions, kindly raise your hand, or you can also drop the questions in the chat box. So there's one question in the chat box. Where do you see the company in 5 years? What is the biggest challenge to achieve your vision, and how do you overcome this challenge? Also, how do you plan to compete with the big players with lot more capital?
Competing with the big player, we are going slowly. We are creating our own space. We are good at our region, basically, in northeastern region, and there are a lot of investment over there. So we are trying to keeping ourselves strong, more and more stronger over there. So that we can execute more and more projects over there with a higher margin of time. So we are not competing with the bigger player Kalpaturu and L&T. So we are creating our own space. So we are only focusing on ourselves to increase our efficiency, executing capability, and executing projects with a higher margin. That is our whole agenda. So we are not looking for any kind of compete. There is a huge market where to compete. So players are very limited. If you go through our tender, whatever tenders are coming in India, whole India, there is a 12 or 13 players only. Out of that, three or four players are listed, and out of eight players are very specific in their segment. Somebody is bidding for pipeline. Somebody is bidding for plant and all. There are huge market. Even Kalpataru, L&T, these people are not focusing on Indian market. They are focusing on GCC market. So this the space is vacant. So there are a lot of more players are required in this space, in this industry. So whom to compete with?
Thank you, sir.
Second question.
Vishwendra, sir, please go ahead. I think he is
So
typed
just a
some
quick
questions.
question.
Yeah.
Like you mentioned कि हम dilution target नहीं कर रहे हैं, तो what will be the debt to equity, max debt to equity that will be raising to fund the higher amount of projects in the future?
Sir, you have to maintain our debt to equity ratio 2:1. Otherwise, we will not be qualified for another project. That is a requirement of tender in oil and gas.
So max debt will be like 2:1 in future.
Yeah, we have to maintain.
Okay, sir. Noted. Thank you, sir.
Thank you so much, Vishwendra, sir. Participants, if there are any further questions, kindly raise your hand or drop your questions in the chat box. Sir, I think we have covered majority of the questions. So if there are no further questions, can we conclude the session here?
I only request you people to be part with our journey and stay with us for long term. You know, we are. I'm thinking a very big vision about my company. I'm trying to position myself after 10 to 15 years of time, uh, parallel with the L&T or Kolpataru. That's my whole target. So be with us, observe our journey, and support us to achieve this target. Thank you.
So we have few hand raised. As we are running out of time, we'll take two more questions. So one from Murli sir and one from Apar sir. Murli sir, please go ahead.
Yeah, actually, I don't have a question. I've been just, listening to what Devnath sir is saying, and it was a wonderful session. Thank you for, very
Thank you, sir.
patient listening all, and we love to be part of the journey.
Thank you, sir.
Thank you. That's all.
Thank you. Thank you so much, Murli sir. Yes, Apar sir, please go ahead.
Sir, actually same. I also not have much of the set of the questions, but sir, if you can elaborate like in a one or 1.5 minute, like about your journey so far, that how you started, briefly, what was your education and experience, that
Sure, sure.
what made you start and all. Thank you.
Yeah, I'm mechanical engineer. I completed my study in Assam Engineering College. Guwahati is a government college. After completion of my this engineering, I got a campus interview and I got chance to work with government of Assam. I got a chance to government with central government also. I got job in MNRE, but I refused to take central government job. And after completion of state government job for 1 year, I came to this Delhi NCR and started journey with Punjab. I got chance to work with Punjab, L&T, Lincoln Helios, lot of companies. I chose for this Punjab, and from Punjab I got a lot of opportunities to work with offshore field as well as Saudi Aramco, Qatar Foundation, and in Siberia also. I worked for a job where the minus temperature, minus 45 degree. We have designed those projects also. So I got a chance to start up one segment of Punjab. There's a engineering division. With 7 people, we started that engineering division, Punjab Engineering. And when I left the Punjab Engineering, That was a 700 people company that time. So, and 2013, I started my oval projects, and because in 2010 I came back in home in Tripura. I settled down in Delhi NCR, in Tripura, and I got to know that Tripura is the largest gas producing state in India for ONGC. It was not known to me because in 12 तक आप कितना ही जानोगे. So, and I that time I got a chance to work with one company. There's a oil and gas exploration company, the Shivani. That got company now defunct. And from Shivani I got a chance to appoint as a project manager for this gas processing facility in Tripura for ONGC. And ONGC, there are a lot of people who inspired me and pushed me that why don't you start your own organization? Because there was no vendor actually in Northeast. Northeast is the, if you see the geography of India, na, if you see the geography of India, the oil and gas is producing only western side in Mehsana, Cambay, Ahmedabad, and yeah, Bombay offshore. And if you go in the southern side, there's a KG basin. And if you come to the northeast side, there's Assam and Tripura is the only oil and gas producing states. So, and the industry actually, they are producing oil India and ONGC is producing the oil and gas, but ancillary industry is not developed. So there are few companies who are giving services to them. In Northeast, there are one or two companies are there. In Guwahati, there is one company that's Assam Petrochemical, Assam Premier Casing basically. So this guy is now very old. So he is also living no, nobody is there to take care of. So we are the only company who are giving service, this type of services in, whole value chain. And there are refineries like IOCL Mongagaon, NRL, Oil India Digboy. There are a lot of refinery, but ancillary industries are not there. Service providing industry. People are there to give the civil construction services, but not in pipeline maintenance, not in flow line activity, not in CGD activity, not in gas exploration fields, not in flow, manifold fields. There are no player. So I found there are a lot of opportunity to give them services because I was that time very known to this field, having experience largely in those areas. So I started this journey in from 2013. 2013, I started slowly, and still I am believing to go slowly. Yeah, obviously, people are saying that by 12 years of time, you have come with the IPO. That's my vision to not to stack up with any capital requirement in the growth. So that was my vision. Otherwise, I was not planning for to come with the small IPO. So, but for grow and not to leave the opportunity whichever here, and not to get any competitor to come into my space. So I decided to go with this IPO thing. Now we are growing slowly, and my whole agenda and whole vision is to compete one day with 500 crore job with L&T and Kalpataru. Maybe L&T will that time will be bigger more than, but I am targeting those things. Our spectrum, market acquisition, our area of expertise as like as Kalpataru and L&T. That I will say. I have 246 engineers and I have developed my team in like that way only. The people are who can execute the project of gas station building, and they can execute the project of pipeline also. They can execute the projects of blast proof building also.
Okay. Thank you
And
so much for
every year we are actually spending money in skill development. We are getting funded from government also for skill development activity, and as well as we are putting fund in skill development activity. Every year we are developing our technicians and all in house. So that's why I am increasing my team members and increasing my capacity.
Thank you. Thank you so much, Gautam sir. So I think we have covered all the questions. So can we conclude the session here? Thank you everyone for your time
Thank
and
you, sir.
participation.
Thank you.
If there are any further questions, you can reach out to us at corporateaccess@kirinadvisors.com. Thank you, Gautam sir. Thank you, Princy ma'am. Thank you, Sahil. Thank you, everyone. Have a great evening.
Thank you, sir. Thank you so much.
Thank you.